All right, welcome back to Right on the Money, providing you and your family the necessary information you need to make informed financial decisions. Now, in case you're just joining us, and if you are, you need to go back a couple segments and start at the beginning, because this is one heck of a conversation with our guest, Pat Ginefra, founder of MyLifeBroker.com, located in Wilmington, Delaware. Now, Pat, we've been talking about retirement in the age of COVID. And one of the things that we left off, we were just talking about Roth conversions. And I hear that, people see that, but what is it?
So Roth conversions can be done on any amount of money. So if you have a tax liability, if you had a 401k, let's say with $1 million in it, you could literally convert all that right now to a Roth IRA just by virtue of paying the tax liability. That's different from contributions into a Roth, which are limited based on earnings.
Right.
So, typically a Roth contribution's capped at about $7,000. So there's a lot of high income folks that look at Roths and they say, well, I can't do that. What they fail to realize is that they can do what's called a backdoor Roth, which is essentially taking a traditional IRA and then converting it to a Roth by paying the taxes on it. Once you establish that, you can convert as much taxable money into that Roth account as you want. Again, you merely have to pay the tax liability on it.
Now, correct me if I'm wrong, I want to make sure I'm on the same page. So there's the traditional IRA, which is a great vehicle for retirement. The upfront benefit is that I get to deduct what I put in it, but when I take money out, it's all taxable. In the Roth, I can put money in, I don't get a deduction, but when I take it out, I don't pay any taxes. Do I have that one right?
That's correct. So on the Roth contributions, we like to say the seed, meaning the money that you put in, the taxes are paid on there. As a result, the harvest, the money that money makes, is also tax-free. So that's one of the key advantages of the Roth.
It's a heck of a deal.
It's a heck of a deal. It's really kind of a no-brainer, if you will. But what happens is that when folks have saved inside of the traditional tax-deferred IRA, they have that tax liability, which is going to be based on the prevailing rates when they make the withdrawal. So what we say is the quicker that you can, pay those taxes while the rates are on sale today, the better.
Yeah.
Because now you will be moving that money into an account that's going to be growing tax-free. And if you're, in your early 60s or thereabouts, and you still have another maybe 15 to 20 years to grow that money, that can make a tremendous difference in the amount of money that you actually end up accumulating.
I see through the course of our conversation that we've had today, the one thing that I think, I don't even think you need to read between the lines very hard at all, is that you need to be doing retirement planning with a professional, because there is so many things we've talked about today. When to take Social Security, what account to be pulling money from, where are you finding yield, down to converting, doing Roth conversions, when and how. I just don't see how somebody does this by themselves.
It's difficult because every area impacts another. Yeah. When you talk about taxation and you talk about making taxable withdrawals, your income is going to affect your Social Security taxation. It's going to affect what you pay for Medicare in retirement. So by converting that money now, you're actually going to be having less taxable income withdrawals later if you're taking out of the Roth. Another common mistake people make is that they're worried about their investments right now. Maybe they're in a tax-deferred account and they don't want to upset the apple cart. What they don't realize is that they can keep those investments inside the Roth. They can have the same exact investment. It's called a transfer in kind. So what they need to realize, it's not the tax buckets, if you will, the way that tax money is formatted, that makes the market go up and down, right? I mean, those accounts and those equities are going to go up and down on their own. They have nothing to do with the tax designations. So you want to make sure that you're owning your growth equities and the assets that you want to grow. You want to make sure that you're growing them in a tax-free account. So you can liberate that from the obligation of the tax man going forward.
See, I have to tell you, we need to put your information up on the screen right now, because anybody watching needs to get in touch with you. Phone number, best way to get a hold of you?
Best way to get a hold of me would be email, pat@mylifebroker.com. You can give us a call, 302-477-6978 is our office number. And you can catch us on Facebook, mylifebroker.com. We're on all the social media. But once you actually engage us, what we're going to try to do with you is really create that plan.
Yeah.
Because that's when it all starts. We're going to look at the Social Security. It's really ground up. We're going to look at recurring income. If you have a pension, we're going to look at all the different options associated with that pension to try to maximize it. We're going to look at income separate from growth. And then lastly, we're going to build a plan for inflation. And a lot of folks are concerned about the money that they're going to leave behind and what the consequences of that will be. So that legacy piece is very, very important. And we call it retiring for life. Life meaning liquidity, income, future growth, which is essential to keep up in this inflationary climate that we've entered. And lastly, estate. So if you just think of that keyword life, you'll think of the 4 major components, and then what you want is a plan to fill in each category right there.
Okay, so I mentioned before, one of the things that's going on right now, probably across the country, is the housing market. And this is a curiosity question really from me, are you finding folks you're working with, are they aging in place, staying in their homes? Do you see a lot of people you're working with selling and downsizing? Are you seeing any trends out in Delaware?
I'm seeing a lot of folks I talk to right now kind of downsizing. Because I think with the real estate market as hot as it is, there's a concern about selling high but then having to buy high.
Sure.
So the only way it really makes sense for a lot of folks is if they're willing to take a little bit less or kind of downsize, if you will.
Well, Pat, it has been a pleasure having you on the show. It always is.
Thank you.
And, folks, if you have any questions about anything we've talked about, reach out to Pat at mylifebroker.com. Check out the website, a lot of information. But that, unfortunately, is our time for today. So don't forget, you can watch full Right on the Money episodes on our official YouTube channel or at rightonthemoneyshow.com, where you can get up-to-date financial news and insights from the top insurance and financial professionals in your area. I thank you for watching. We'll see you next time.